Hello, I'm Kevin Flynn, and welcome to another edition of Avalon's Market Minute for October 27th, 2013. Stocks made a new high last week as the S&P closed at an all-time record of just under 1760. You may recall last week that I said momentum and technicals should carry an attempt to hit that range, so what happens next? Well, classic stock market behavior would be to poke just a little bit higher before starting a general retreat. There are a couple of buy catalysts this week. The Fed's policy announcement on Wednesday and the first day of the month on Friday, both very important fundamental factors. The Fed announcement is like the jobs report. It's a semi-automatic rally. The difference between the two is that the jobs report rally doesn't happen until after the release of the report, so long as it isn't horrible, while the Fed rally often ends shortly after the announcement. Now, these rallies aren't a reflection of investor confidence or reassurance. Rather, they are being driven by black box computer trading programs playing the percentages, with additional fuel from traders either following them or just buying into the whole hype. I think the most common phrase I read last week with regards to the market was stimulus bets. Last week's jobs report fell into the Goldilocks zone. The fact there's about 30,000 jobs short of estimates was no problem because it means more stimulus for some unknown number of months, maybe forever. Whether or not that is such a good thing doesn't matter for now because there's a broad consensus that everyone else believes it, so you might as well buy it too. These kinds of affairs always finish up badly, but knowing when will they end, that's the catch. When you have an earnings season rally and a weak earnings season, like this one, it usually ends during the third week, which was last week. Fortunately for bulls, though, the combination of the delayed jobs report and the new target on the S&P 500 was an irresistible lure that trumped other considerations. I suspect that this week may similarly benefit from the Fed meeting and first day of the month rally, but if those two should come to pass, the market will then be strongly overbought in the face of weak earnings growth and reduced guidance. So I would look for consolidation period to follow if it doesn't start this week, one that could easily end up testing the 1700 level again on the S&P 500. So don't let those brand new highs tempt you right here. I'm Kevin Flynn, and thanks for listening to another edition of Avalon's Market Minute.